It's Monday, the 23rd of January. Joe with you here. It is a market roundup. Hello, Mavericks. Let's get into it. I've got my 2 cents. Take it for what you will. Take responsibility for the outcome. Let's get into a market analysis. As today just kind of continued upwards from Friday's move up, we've got ourselves kind of a couple of different stories here when it comes to technically versus fundamentally, and maybe some of the sentiment, I should say, with some of the people I've been talking about, including myself. I'm not going to lie. Got my opinion, my own opinion, and you're absolutely going to have to listen to it unless you just want to fast forward this. But so first off, how do we finish? Well, the Dow, the S&P, the Nasdaq, all higher, and interesting enough, different than what I've seen in the past. Usually, the Dow was the big winner. The S&P/Y was in the middle, and the Nasdaq was kind of a winner. And it looks like the Dow and the Nasdaq have switched places, but it's still a pretty impressive move to the upside of over 2% on the Nasdaq, or the composite there. Now the S&P over 1% is great, and the Dow 0.75% based on the fact it's been pulling back quite a bit. The Russells also liked a good move to the upside, but oil and gold went very silent, and it might be the fact that, hey, we did see a pretty good move in the volatility index, something that actually really raised my eyebrow when I addressed last week, because it wasn't just a pop-up, it was a gap up in the volatility index. It looks like that is actually subsiding. So I'm not sure if this is something shorter term or longer term. We have a market, in my opinion, that is actually kind of behaving like, hey, that was it. That was a correction. That was the bottom there at the end of the year. Here we are in the shallow pullback above moving averages. So I'll get to the chart here in a second. But I'm starting to actually see Reddit stuff pop back up. Hey, naked shorts are out there. Let's go ahead and jump in and try to squeeze these again. And some of the mentality and attitude of 2020 and 2021 even raising their heads, saying that, okay, that's it. That was a correction. Let's get back to business. So inflation remains the focus as we have mixed signals. We knew this was going to happen. Shorter term is going to happen sooner than longer term. The tough part is to not do it too much before the longer term catches up, right? That's why the Fed gets beat down all the time. Janet Yellen comes out and says we have hit our debt ceiling. We are exceeding it. So there's some doom and gloom there. Yet we have some shorter term numbers with manufacturing showing that it's just falling apart. But Powell's still a little bit worried about our job number, which came in super strong. The jobless claims number last week was really strong. So it's this kind of push and pull. What are we left with? Well, let's focus in. I got the advanced decline line here, 67% advancers, 29% decliners, 4% just kind of flat. Above below the 50, AMA is 75.25. Seriously, folks, this is pretty much because the rally we had since the beginning of the year. And I imagine that's put everything back into check. So let's get into the chart, because that is what I'm going to focus on. Now, if I'm a trader, which I am, and I'm taking a look at a trade to up or down, it is absolutely, without a doubt, going to be to the upside. Now, this doesn't mean that I'm going to buy here and I'm going to tell you guys that I'm going to sell it at the end of 2023. No, I'm seeing a short-term ascending triangle pattern happening. This nice little crossover is wrong. I want to see this crossover. It's not quite there yet. Now, if I was to get into this as it breaks to the upside here, I know that 410 is what I'm going to need to see this price action to get to before this crossover happens to the correct side, somewhere in this area. So, can I get into it bullish today or tomorrow if we break above the first line? Let me go ahead and redo that pin. If we get above this, the answer is absolutely yes, but I don't want to play it too far past this shorter term. And this is what we've been talking about for a couple of weeks. Even Darren and Rob made mention of it on the weekend class, saying, you guys, we got to be bullish. That's what the chart's saying, but not for too long. This is a different market than it was last year, even a year before. Slowing down, slow growth. So I just don't know if outside of the Reddit stocks or the euphoric attitude maybe of maybe the sentiment in the short term saying, hey, it's over, let's shoot, let's go for it. Kind of the fear of missing out, people that came late to the party, might actually push this up to hit this point. But my money is not on it. So there is my outlook. I told you guys I'd give it to you. You're welcome. Let's take a look at the Qs. The Qs is showing a little bit more strength because of the fact that there is a lot more beaten down stocks in this area. We have a lot of the stay-at-home stuff that has been smashed. So we do have this break above this, a little bit more of an ascending triangle pattern, but we do have this huge line in the sand here. Same as the SPY. Hey, it's going to do something when it gets there. We are in the meat of earnings season, and I think that is going to be a direct indication of what companies believe that they're going to do or what the economy is going to do moving forward. Now, that doesn't control what investors want to do. So how do we fare today? It was just an over across the board, move to the upside. Healthcare didn't really participate. Meta shot up, Apple shot up, Microsoft. I understand Apple and Microsoft moved up. Apple's 2.35%, Microsoft up almost 1%. So I'm going to go ahead and just trade the markets in front of me. I have a +1 and a +1. Monthly outlook is +1 because of why? It's above the 20, it's above the 50. The slopes are both moving higher, but I left it yellow because the 50 is still above the 20. I need to see a little bit more oomph before I go +2. But we are definitely moving in the right direction technically. I just love to say this again and again and again. I am more than confident to buy this stock or the SPY here up to that 410. More than confident. Unfortunately, it might hit it tomorrow. It might hit it in a week. But there's no way I'm going to hold that past a day past the time it hits it without expecting some sort of correction. So we'll see. Now, can it get there? Right now, we don't have too much on docket. The rest of the week, I mean, I've only got 2 or 3 earnings announcements today and tomorrow, but it gets huge the rest of this week and into next. Some of the huge tech guys, some of the bigger ones. And I think that's going to have a lot to do with where we go for the rest of the month or maybe the rest of this quarter based on some of the sentiment reaction to those numbers. All right, so but for now, trade the markets in front of you. That's where I'm at. Potential trades wise, I'm not leaving anything sideways. I think everything participates or it doesn't. I'm seeing some strength, and some of these are reluctant. Meta was a reluctant one for me, but it's going higher. AEM makes sense because it is in the precious metals. We'll take a look at them. Macy's has been doing pretty well. And then on the bear side, ADM, CI, ABC. Let's take a look at a few. Here's Meta. Meta on a charting aspect makes the most sense. Now understand, Meta was the first one to come out and say, hey, we're going to miss numbers. We're not going to do very well in the future. We're going to lay people off. We've got issues and problems. However, that's thin. That's back here. Now that that's gone, look what the stock's doing. Oh, there's potential for growth. Everything is bad. All the bad news is gone. There's potential to get back up to these areas. Now, I don't know fundamentally if that makes sense, but all the news has been flushed. And if you guys remember, Meta's been in a situation for a while. It was Facebook. They changed to Meta because of some lawsuits and some worries and structures, and they try to revamp it. All of a sudden, Facebook is now, it's going to be an online artificial intelligence world, and name it. It doesn't matter. As far as the investor goes, all the bad news was back here. So there's potential for growth, and that's kind of what we're seeing. As far as you and I are concerned, it's a stock chart. It's an uptrend. It's breaking above averages. It's showing some strength. Got a little bit of a slope here. Bullish crossover. Moving averages are moving higher. Volume's not really giving us anything, but our next target legitimately is up to that 160 level. Plain and simple. That's kind of what I see it as. Now, if you've got biases, if you've got economic outlook, if you've got any political outlook, that's on you. We're just doing charts. Let's go to STT. This is a nice high base breakout, ascending triangle breakout if you want to add that to the list. I like it. A little bit of an ascending move here. Sorry, folks. Let me draw something a little bit straighter. There we go. Nice little pop out on Friday. Look at this, though. Gap down. Oh, just kidding. We aren't going down. We're going up. So a lot of volatility, a lot of decision making, and a lot of it just doesn't seem like there's much gumption behind. It's either good or bad. And it's really difficult to gauge markets like that. That's why we refer to them as no man's land. However, this is above that resistance pretty comfortably here, above that 85 and 86 dollars and change. So a potential trade to the upside if you are bullish. The last one I have for us is a basic materials. This is gold. Gold has been doing really, really well in light of inflation and worries and interest rates increasing and a dollar that's gone up. It's funny to see them go up in tandem. Now, this is kind of leaking above kind of a high base here at 54 and 56, but I do like it as something to slow play, maybe against anything that you have that's bearish or any sort of worries that you have with the dollar or if things just kind of hit the fan. So, but it was brought from you guys, and I love it. Okay, nothing on the sideways stuff. It's either up or down. You got stuff participating or don't. Here's Archer Daniels Midland. This actually came from Corey last week. I do love it. I think it's great because of this move that it had, this anemic move back up, barely shadowed towards the 20-day moving average that's falling apart. Take a look at this beautiful crossover at the end of December. We're right back down to these levels. Now, yes, I am seeing a couple of shadows on Friday, even today, but look at that volume. There's a lot of push. Short-term target, 80. Longer-term target, you can go as deep as you want. Just depends if these markets are going to roll over and continue to sell off. But I'd be pretty comfortable on this. Now, Archer Daniels, for me, folks, was actually one of my bullet watch stocks towards the end of the year, last year. But how quickly things can change, which is why we trade the markets in front of us. Here's CI. Cigna. Healthcare has been slipping. As far as a sector, it was actually pretty much almost bulletproof for a while there, but it's been slipping a little bit. And what I liked about this is I'm going to kind of draw this really weird kind of a lump-headed, it's a head and shoulders, but if you focus on these levels here, gosh, that's not straight. The 330 mark, it was a shoulder over. But once it broke that, it had no problem revisiting this correction that it had early November. Take a look at that. So it actually hit it, and now it's using it as resistance. A beautiful bearish crossover. Let's make it easier for you guys. The 20 and the 50. Crossover here. Comes back, touches this. My expectations is a break below that 305, 304, whatever you want to call it. Moving down to the 290, maybe in the 280 plus level. But a pretty good potential bear. The last one I got for you guys is ABC, and it is basically ABCing itself down. Kind of a joke if you guys like it. I'm just focusing on this pattern here. Let me get my pen back out. And I am not like an Elliott wave theorist or anything, but you got your A, B, C, or whatever you want to call it, and then the breakdown is going to be through here. It looks like it's right there. Or we can call it a good old-fashioned symmetrical or descending triangle pattern. Once it starts to slip towards that 160 or lower level, you do have a level here, right? Might hold on. Sorry, I apologize, folks. My lines are not the straightest. But a huge drop to 155 and even lower makes sense. So that's what's on my watch list. So to end it up, we got pushing above resistance levels on a technical move. All of them are. Like I showed you guys some headlines. There's a lot of mentality out there like, hey, let's do the short squeeze again. Let's do some of those Reddit stocks. Let's try to, these naked short sellers. Let's see if we can squeeze out these institutions to make some more money. So there's optimism out there. And there's still a lot of money when it comes to consumer. We did see retail sales go lower. We did see some slowdown in some of the shorter term stuff. However, and manufacturing falling apart, that could be really bad longer term. But it's hard to gauge because we are still employed. That jobless claims number went the wrong way. We've got a lot of people still employed. The employment number didn't go down, and we got a GDP number coming up that will be pretty interesting. So trade the markets in front of you, but keep in mind we choose our time frame. So for my bears out there, including me, I know you guys can hear the bias in my voice. I'm not going to put anything on more than a week or two. There's no way. There's no way. Maybe some bad news here and there, but I'm not going to put my, I'm not going to bet my whole account on something longer term that we're going to fall apart. But we don't have to. Shorter term versus longer term numbers, we got to keep that in mind. The Fed has kept that in mind. They're seeing the shorter term stuff saying they should take the foot off the gas, but longer term, those numbers, that employment number has to change. That has to change. And by the time they take their foot off the gas, then it might be too late. And then we go to recession and they blame the Fed for it. That's the difficulty of navigating a soft landing. In my 20 years, folks, I haven't seen one. I haven't seen a soft landing. It's always been a little bit too aggressive for what it is. So we are in earnings season, so please check the potential trades. There's a handful out there tonight and tomorrow, but there's so many of them coming up the rest of this week and next week that it's best just to check every single night. It usually gives you 1 or 2 days out if you're checking FinViz. So just make sure you find out what you're looking for and go for it. All right, guys, thank you so much for joining me. We'll talk to you next time. See you, folks.